If a small business owner types the phrase workforce management software into Google in 2026, the top of the page returns two completely different categories of product that share the same name and almost nothing else. One category is shift scheduling and time tracking software built for restaurants, retail stores, dental practices, cleaning companies, HVAC contractors, and any operation where the team works in shifts and gets paid by the hour. The other category is HRIS-first software built for salaried office teams, where workforce management is a reporting layer on top of payroll and benefits administration. The buying decision for the first category looks nothing like the buying decision for the second. An owner shopping in the wrong category ends up either overpaying or underpaying for the wrong workflow. This is a video about the first category, the shift scheduling, hourly team, Frontline Ops version of workforce management software. The version that matters for an operation where the team clocks in for a shift, leaves at the end of the shift, and gets paid by the hour for the time in between. There are 5 workforce management tools that show up in every credible 2026 recommendation list for small business in this category: Homebase, Connecteam, 7 Shifts, Deputy, and When I Work. Each one has a free tier or a starter plan under $50 a month. Each one publishes public pricing that an owner can compare without sitting through a sales call. Each one is built for hourly teams, not salaried office staff. And each one is the right answer for a meaningfully different kind of small business, which is the part that makes the choice between them confusing in a way that the marketing pages do not address. What follows is the framework for choosing between them. 5 questions about the business that determine which tool is the right pick. The annual cost math for each tool at a 10-employee team and a 30-employee team, the standout strength and the real limitation that small business owners run into with each one, and the honest accounting on which tools have affiliate links in the description and which one does not. The goal is to give a small business owner the information that the comparison article landscape does not, which is the specific shape of the decision matched to the specific shape of the business. Before walking through the 5 tools, the question worth answering is what the business is paying right now to not have workforce management software. The cost of staying on spreadsheets, paper schedules, group text shift coverage, and honor system clock-ins is rarely visible as a line item on the profit and loss statement. That is the part that makes it expensive. It shows up as labor cost percentage that drifts upward 2 or 3 points across a year for reasons the owner cannot quite name. It shows up as manager time absorbed by scheduling work that does not produce revenue. It shows up as turnover that traces back to a few specific kinds of friction that better tooling would have removed. Labor is the second largest cost category in most small businesses that run hourly teams. In restaurants, labor lands between 25 and 35% of revenue, second only to food. In retail, dental practices, and field services operations, the proportions look slightly different, but the size of the line item is the same. A 1-point movement in labor cost on $1 million revenue business is $10,000 in either direction. That single fact is the reason workforce management software pays for itself when it pays for itself and is dead weight when it does not. The cleanest data on what workforce management software actually saves comes from a 2026 restaurant scheduling automation ROI analysis that tracked operators through the move from spreadsheets to platforms. The average labor cost percentage dropped by 2.1 points. After the move, on $1 million revenue restaurant, that translates to about $21,000 in annual savings. Manager time recovered ran between 8 and 10 hours a week, which at average manager compensation is somewhere between $10,400 and $13,000 a year of capacity that comes back into the business. Overtime costs dropped 20 to 30% on average. The payback timeline on the software investment came in at 90 to 120 days for a full-service restaurant, which is faster than most operators expect when they first look at the subscription cost. The other side of the math is the cost of the leaks that the software prevents. Buddy punching, which is the practice of one employee clocking in or out for another, costs United States employers more than $370 million a year in stolen wages, according to workforce fraud research, aggregated across multiple industry standard sources. 3 of every 4 employers in the country are affected by it in some form. In some industries, it eats up to 7% of the labor budget before the owner realizes a leak exists. For a single 10-person operation paying $15 an hour, a modest pattern of 5 employees buddy punching 30 minutes a day adds up to roughly 900 phantom hours a year. That lands between $13,500 and $16,000 of wages paid for work that was never done. A biometric time clock catches this leak completely. 3 of the 5 tools in this video offer one at an entry-level price point. The replacement cost math is the third lever. When a front-of-house employee leaves a restaurant in 2026, the average cost to replace that person, including recruiting, training, and lost productivity during the gap, runs around $1,056. For a back-of-house cook, the number climbs to about $1,491. Most operators have stopped trying to compute their own turnover cost because the math is dispiriting. The move that drops the number is not a higher wage or a referral bonus. It is a small set of operational practices that workforce management software makes easier to run consistently. Predictable schedules published 2 weeks in advance instead of 3 days. Shift swap workflows that do not depend on the owner being awake at 6 in the morning. Performance feedback on a regular cadence instead of when something goes wrong. The right tool does not replace the practice. It just makes the practice easier to keep. If a small business owner is on the fence about whether any of this software is worth the subscription cost, the honest framing is that the spreadsheet itself is rarely the binding constraint. The binding constraint is the labor leakage that the spreadsheet allows to happen without being seen. Moving to any of the 5 tools in this video when the business is at the right stage tends to pay for itself somewhere between 3 months and a year after the move. The move itself is far easier than most owners expect. The first tool in the framework is Homebase, which is the default small business workforce management entry point in 2026, for a reason most operators discover the first time they look at the pricing page. Homebase publishes a free basic plan that covers one location, up to 10 employees, with basic scheduling, basic time tracking, and integrations with Square, Toast, Lightspeed, and Clover. Most products that advertise a free tier publish a demo grade version that runs out of capability within the first week. Homebase publishes a free tier that an actual 10-employee single location operation can use as the primary scheduling and time clock tool indefinitely. That is the reason it shows up in every credible recommendation list as the default first move. Above the free tier, Homebase scales through 3 paid plans priced per location per month. Essentials at $24 on monthly billing adds advanced scheduling and team messaging. Plus, at $56 adds department-level permissions. All-in-One at $96 on monthly billing adds employee onboarding, labor cost management, and full HR and compliance tooling. Annual billing on Homebase publishes higher monthly equivalents than monthly billing on the public pricing page, which is unusual in the category and worth checking against the live tile at the time of sign-up. For a 10-employee, single-location business, Essentials runs about $288 a year. For a 50-employee single-location business on All-in-One, the same plan runs about $1,150 a year. The native payroll add-on is $39 a month, base plus $6 per employee per month. That avoids needing a separate payroll vendor and is one of the reasons restaurants tend to land here. Homebase is the right pick for a single-location restaurant, retail shop, salon gym, or dental practice with fewer than 10 employees that wants to start free, run for as long as it makes sense to run free, and then upgrade to a paid tier when the team grows past the free cap or when integrated payroll becomes the binding need. The places where Homebase becomes the wrong pick are at the multi-location stage and at the field services stage. At the multi-location stage, $96 to $120 per location per month adds up faster than the operator expects across 3 or 4 locations. At the field services stage, the work happens away from a fixed location, and Homebase's product depth on mobile, GPS verification, and field workflow features is thinner than Connecteam's. A small business owner choosing between Homebase and the alternatives below should ask one question first. Is the operation single location with fewer than 10 employees on a path that is more likely to scale through adding employees at the same location than through opening more locations? If the answer is yes, Homebase Basic is the right move today. The upgrade to Essentials at $24 happens when the 11th employee joins. If the answer is no, the framework gets more interesting starting at Connecteam. The second tool is Connecteam, which solves a different shape of problem than Homebase, where Homebase is built for a team that shows up to a fixed location and clocks in at a kiosk or a tablet. Connecteam is built for a team that does not work at a fixed location at all. HVAC technicians driving between service calls, cleaning crews moving across multiple commercial properties, security guards patrolling sites, home health aides visiting clients, landscaping crews rotating across job addresses, construction teams working across multiple sites. The Connecteam product is mobile first, which in this context means the primary interface for both the manager and the employee is the phone in the employee's pocket. The feature set is built around the assumption that nobody is sitting at a desk. The Connecteam pricing structure is unique among the 5 tools in the framework. The company organizes its product into 3 independent hubs: operations for scheduling, time clock, and tasks; in communications for team chat and announcements; HR for employee documents and training. Each hub bills separately. The operations hub free tier covers up to 10 users across all features, which is more restrictive than Homebase's free plan, but real enough to use as an evaluation period. Above the free tier, the Operations Hub scales through a basic plan at $29 a month for the first 30 users on annual billing, an advanced plan at $49, and an expert plan at $99. Per user fees beyond the first 30 run between 80 cents and $4.20, depending on tier. For a 15-person HVAC contractor running the Operations Hub on Advanced, the annual costs lands around $588. For a 40-person cleaning company on Operations Expert, the math runs the $99 base plus 10 additional users at $4.20 each. That works out to about $1,700 a year on the Operations Hub alone. Adding the Communications Hub for team chat and the HR Hub for shared document storage roughly doubles that number. The breadth of the product is the reason small operators end up paying for 2 or 3 hubs, even when they intended to pay for 1. It is also the reason Connecteam tends to replace 3 or 4 single-purpose tools rather than just one. The standout strength of Connecteam is feature breadth. No other tool on this list packs scheduling, GPS time clock, mobile chat, training modules, document storage, custom forms, and task management into a single mobile product the way Connecteam does. For a field services operator who would otherwise be paying for separate scheduling software, a separate messaging tool, a separate training platform, and a separate document storage system, the consolidation math is favorable even at the expert tier. The limitation is the learning curve. Connecteam has more buttons, more modules, and more configuration options than Homebase or When I Work. An owner who only needs scheduling will spend the first week clicking past features they will never use. The question an operator should ask before landing on Connecteam is whether the team works away from a fixed location and whether the operation would otherwise be paying for separate tools that Connecteam can replace. If both answers are yes, Connecteam is the dominant pick at this tier. If the team works at a fixed location and the operation only needs scheduling, Homebase is simpler and cheaper. If the team is in a restaurant specifically, the next tool in the framework is purpose-built for that vertical and tends to be a better fit than either. The third tool is 7Shifts, which is the workforce management platform built specifically for restaurants, where Homebase covers restaurants among other verticals, and Connecteam covers restaurants as one of many frontline ops segments. 7Shifts is purpose-built for restaurant operations and goes deeper into restaurant-specific workflows than either. Tip pooling. Manager logbook for shift handoff notes. This is the central of the ability of the entire country by chess scheduling laws in cities like San Francisco, Seattle, New York. POS integrations that run native across Toast, Square, Lightspeed, Brink, and most of the other major restaurant point-of-sale systems. One important piece of accounting before the pricing details. 7Shifts is a Saskatchewan-based company, and the public pricing page publishes figures in Canadian dollars regardless of the visitor's location. That includes when a United States operator is logged in through a United States VPN. The figures on the website are CAD. The United States operator's credit card statement will reflect the United States dollar equivalent at the foreign exchange rate on the billing day, which at recent rates lands roughly 25% lower than the CAD figure. This is a real source of confusion for restaurant operators comparing 7Shifts against Homebase, where Homebase publishes USD figures on the United States version of the page. The numbers walked through below are the published CAD figures with the approximate USD equivalent at current exchange rates noted alongside. The 7Shifts free plan, named Comp, covers a single location with up to 15 employees. It includes basic scheduling, one-way announcements, and availability and time-off requests. Above the free plan, the Essentials plan at $39.99 Canadian per location per month on annual billing, which is roughly 30 United States dollars, adds advanced scheduling, team messaging, and basic time clocking up to 30 employees. The Pro plan at $79.99 Canadian, roughly 60 United States dollars, adds the manager logbook, advanced time clocking, labor compliance, employee performance, and retention tools, and lifts the cap to 60 employees. The Premium plan at $134.99 Canadian, roughly 100 United States dollars, removes the employee cap and includes tip management and task management natively, along with the most advanced labor forecasting in the product. For a 10-employee single-location restaurant running 7Shifts Essentials, the annual cost lands at about $480 CAD, which is roughly 350 US dollars at current exchange rates. For a 30-employee single-location restaurant on Pro, the annual cost is about 960 CAD, roughly 700 United States dollars. For a multi-location restaurant group with 3 locations on Premium, the math runs 3 locations times 135 CAD per month times 12 months. That works out to about 4,900 CAD a year, roughly 3,600 United States dollars. The standout strength of 7Shifts is the depth of restaurant-specific tooling. Tip management is not an afterthought. It is built into the premium tier with calculation, distribution, and payroll integration as a primary workflow. The manager logbook is not a generic notes feature. It is built for the actual shift-to-shift information transfer that restaurant managers do, and it removes the cluster of text messages and verbal handoffs that lose information in the gap. Labor compliance is built for predictive scheduling laws in the cities that have them, which most general-purpose WFM tools handle as a checkbox rather than a system. The limitation of 7Shifts is that the restaurants specifically is also a constraint. For a retail shop, or a dental practice, or an HVAC contractor, the restaurant-specific workflows are dead weight that the operation is not using, and the price is the price. The other limitation worth naming is that the published pricing page is purely client-side rendered. That is the reason aggregator sites have published stale or incorrect 7Shifts pricing for the past several years. The plan names changed from Comp, Entree, The Works, and Gourmet to Comp, Essentials, Pro, and Premium at some point in the past year, and most of the comparison articles still in the top search results have not caught up. The Canadian dollar currency mismatch compounds the confusion. An owner shopping 7 shifts in 2026 should go directly to the company's own pricing page. Mentally convert the CAD figures to USD at current exchange rates and treat any aggregator citation with skepticism. The question a restaurant operator should ask before landing on 7 shifts is whether the restaurant-specific features are worth paying for. If the operation does heavy tip pooling, runs in a city with predictive scheduling laws, runs multiple shift handoffs a day where information loss is a real cost, or runs across multiple locations, the answer tends to be yes. If the operation is a small, single-location restaurant with a stable team that does not run tip pooling and does not have a multi-shift handoff problem, Homebase Essentials at 24 United States dollars per location per month covers the actual workflow at a meaningfully lower cost. The fourth tool is Deputy, which is the workforce management platform built for the multi-location stage, where Homebase is the default first move and Connecteam and 7 shifts are the vertical specific deep picks. Deputy is the tool that small businesses tend to graduate to once they have crossed the 25 employee mark or opened the second location. The company has more than 390,000 customers globally. The published pricing on the website is the cleanest of the 5 tools. The multi-location workflow tooling is more mature than what any of the other tools in this video offer at a comparable price. Deputy has no free tier. The product runs on a 30-day free trial across all paid plans. Pricing starts at the Lite plan at $5.50 per user per month on monthly billing, $5 on annual billing. Lite covers basic scheduling, basic timesheets, time clocking, labor law compliance, and leave management. The core plan at $7.25 per user per month, monthly, $6.50 annual, adds advanced scheduling, timesheet auto approval, and biometric time clocking. The Pro plan at $10 monthly, $9 annual, adds custom access levels, 24/7 chat support, and Deputy's analytics and messaging add-ons included rather than separate. Below all of those, Deputy publishes a $30 minimum monthly spend, which has been in effect since September of 2025 and applies to all monthly plans. For a 10-employee operation on Lite, the natural monthly cost is $50 and there is no minimum spend impact. For a 5-employee operation on Lite, the natural monthly cost is $25 and the minimum bumps the bill up to $30. That is a real friction for the smallest operators. And the reason Homebase or Connecteam or When I Work tend to be better picks below 10 employees. For a 30-employee multi-location retail chain on core annual billing, the math runs 30 users times $6.50 times 12 months. That works out to about $2,340 a year. That price gets the operation biometric time clocking and advanced multi-location scheduling at a price point that most of the alternatives cannot match at the same feature depth. The standout strength of Deputy is the maturity of the multi-location and labor compliance tooling. For a retail chain with 3 to 5 locations, a dental practice group, a healthcare clinic group, or any other operation that spans multiple physical sites with shared employees, Deputy handles the shared workforce scheduling, location-specific labor compliance, and consolidated reporting in a way that the simpler tools start to strain on. The biometric time clocking on core at $6.50 per user per month on annual billing removes the buddy punching leak walked through in Section 2 at one of the cleanest price points in the category. For an operation with a real buddy punching problem, Deputy Core pays for itself on that one feature alone. The limitation of Deputy is the absence of a permanent free tier and the $30 minimum monthly spend. For the smallest single location operators, the friction to entry is meaningfully higher than the alternatives. The other limitation is that annual billing locks for 12 months with no planned downgrade option. An operator who upgrades from Lite to Core during a busy season and then wants to step back down at the end of the season cannot do that until the annual term ends. The question a small business owner should ask before landing on Deputy is whether the operation is at the multi-location stage or about to be, or whether the team has crossed 25 employees at a single location with a real labor compliance or buddy punching concern. If yes to either, deputy is the right pick at this tier. If the operation is still at the single location, sub 10 employees stage, the simpler and free or near free tools cover the workflow at a lower friction to entry. The fifth tool is When I Work, which solves for a different shape of buyer than any of the other four tools in the framework. Where Homebase is built for restaurants and retail, Connecteam for distributed teams, 7 Shifts for restaurants specifically, and Deputy for multi-location operations, When I Work is built for the small business owner whose only binding need is shift scheduling and clock in. The owner who does not want to learn a complicated product and who values the shortest possible distance between signing up and having a published schedule. When I Work publishes only 2 paid plans. The only difference between them is whether the operation runs from one physical location or from 2 or more. The single location plan is $2.50 per user per month. The multi-location plan is $5 per user per month. Every feature is included in both plans. There are no feature-based tiers, no add-on upsells, no separate modules. Scheduling, time clock, team messaging, shift swap, labor budgeting, and workforce analytics all come standard. The product runs on a 14-day full access free trial without a credit card requirement. After the trial, the operation moves to one of the 2 paid plans. For a 10-employee, single location coffee shop, dental practice, salon, or gym on the single location plan, the annual cost runs $300. For a 30-employee single location operation, $900. For a 30-employee multi-location business across 2 locations on the multi-location plan, $1,800. The pricing is the simplest in the category to compute. That simplicity is itself the product proposition for the buyer who values predictability over feature depth. The standout strength of When I Work is the learning curve. An owner who has never used workforce management software before, who is not particularly tech savvy, and who only needs the team to see the schedule and clock in and out, can have When I Work running in under 30 minutes from sign up. The other tools in this framework all carry steeper learning curves because they all do more. For the operator who only needs the basics, doing more is a cost rather than a benefit. The rippling partnership is the other thing worth naming. When I Work customers get the first 6 months of rippling payroll free. That is a meaningful perk for an operation that wanted to consolidate payroll and scheduling, but wanted the scheduling tool to be the simple one rather than the complicated one. The limitation of When I Work is everything that is not scheduling and time. Clock. The product does not have native training modules, does not have document storage, does not have integrated payroll inside the product, does not have the depth of multi-location tooling that Deputy offers, and does not have the breadth of frontline ops features that Connecteam offers. For an operator who needs any of those things, When I Work becomes the wrong tool. The operation either ends up running 2 products in parallel or migrates to one of the other 4 tools in the framework. The question an operator should ask before landing on When I Work is whether the binding constraint is the simplest possible product. If yes, When I Work is the dominant pick at this tier, and the simplicity is worth giving up the feature breadth that the other tools offer. If the operation needs anything beyond scheduling and clock in, the right move is to look at one of the other tools and accept the learning curve that comes with it. The framework collapses into 5 questions that determine which tool is the right pick for a specific business. The first question is whether the operation is a restaurant. If yes, the choice is between 7 Shifts and Homebase. The right answer depends on whether the restaurant uses tip pooling, runs in a city with predictive scheduling laws, runs across multiple shifts with real handoff complexity, or operates across multiple locations. If any of those is true, 7 Shifts is the dominant pick, even with the Canadian dollar currency mismatch on the marketing page. If none of those is true, Homebase Essentials at 24 United States dollars per location per month covers the actual workflow at a lower cost and a simpler interface. The second question is whether the team works away from a fixed location. HVAC technicians, cleaning crews, security guards, home health aides, landscapers, construction crews, and any operation where the work happens in the field rather than at a desk or a kiosk. If yes, Connecteam is the dominant pick. The mobile-first product is built around exactly this shape of workflow, and the breadth of features removes the need to run 3 or 4 single-purpose tools in parallel. The third question is whether the operation is at the multi-location stage or about to be. If yes, Deputy is the dominant pick. The multi-location workflow tooling and the labor compliance handling at this scale is more mature than what the simpler tools offer at the same price point. The biometric time clocking on the core tier addresses the buddy punching leak at one of the cleanest price points in the category. The fourth question is whether the binding constraint is simplicity. For an owner who has never used workforce management software, who is not particularly tech savvy, who runs a small single location operation with under 30 employees, and who only needs scheduling and clock in, When I Work is the dominant pick. The product does exactly what is needed and nothing else, and the learning curve is the shortest in the category. The fifth question is whether the operation has fewer than 10 employees at a single location and wants to start free. If yes, Homebase Basic is the dominant pick. The free tier is real. The upgrade path to Essentials when the 11th employee joins is smooth. The POS integrations across Square, Toast, Lightspeed, and Clover make the move from a separate point-of-sale system into integrated scheduling straightforward. Most small business owners running through these 5 questions land on a single tool by the second or third question. The one that does not happen is finding that 2 or 3 tools are equally right. That is the part most comparison articles never address. The 5 tools serve 5 meaningfully different kinds of business. The framework above is built around naming those differences rather than treating them as feature comparison trade-offs. The annual cost math for every tool at a 10-employee team and a 30-employee team, the official pricing pages for each platform, and the affiliate links for the 4 tools that have partner programs are all in the description below this video. The 4 tools with affiliate links are Homebase, Connecteam, 7 Shifts, and Deputy. Picking any of those 4 through the partner link helps fund the next video on this channel at no extra cost to the buyer. The one tool in this framework without an affiliate link in the description is When I Work. The partner program is internal referral only, and the channel structure does not support that path. The recommendation still stands. When I Work is the right pick for a single location operation with under 30 employees that only needs scheduling and clock in, and the absence of a partner link has no effect on the framework. Honest framing matters more than commission, and naming the no affiliate tool out loud is part of how that honesty stays intact across videos. The most useful question to bring into the comments section under this video is which of the 5 questions in the framework lands first for the specific business, and which tool the operation is currently running. The first question landing, the second question landing, the third question landing, and the current tool are the 4 pieces of information that turn a general framework question into a specific decision. The answers across the comments turn into the data that shapes the next video on this channel, and the threads where multiple owners are wrestling with the same first question landing tend to become the seed for the most useful follow-up content.